In May, the CPI rose by 0.2% year-on-year, and the previous value rose by 0.1%. In May, the PPI fell by 4.6% year-on-year, and the previous value fell by 3.6%. One, prices have dropped sharply. It's time to go all out for the economy. The price data dropped sharply in May, and the PPI data entered a significant negative growth range, fully reflecting the problem of insufficient aggregate demand. At present, the dividends of liberalization of economic activities have basically subsided, and the economy has ended its pulse-like rebound and entered a normal recovery track. Policies need to be stepped up to expand domestic demand. 2023 to 2024 is the year of recovery. The current road to economic recovery is full of twists and turns. The dragging factors come from scar effect, damaged balance sheet, active destocking cycle, real estate hard landing risk, and US and European banking crises. Balance sheet damage in the corporate and household sectors. On the residential side, high leverage ratios, declining incomes, rising youth unemployment, and a downturn in the stock market have forced them to reduce consumption and increase precautionary savings. On the enterprise side, the decline in real estate sales and investment has brought about sluggish demand in the overall real estate chain. Superimposed on the destocking of industrial enterprises, both volume and price have fallen, and profits have continued to drop. Residents are unwilling to consume, enterprises are unwilling to invest, and credit cannot be transmitted, resulting in a liquidity trap. Avoid turning into a balance sheet recession. Balance sheet damage is the short-term deterioration of the balance sheet, which is a normal reflection of economic cycle fluctuations. Balance sheet recession is the long-term continuous contraction of the balance sheet caused by the decline in asset prices, behind which is a society that spans cycles vitality weakened. At present, it is necessary to alleviate the pressure on the balance sheets of residents and enterprises, stabilize the property market and expand domestic demand. It is recommended to introduce a combination of short-term economic stimulus to form a joint force to expand domestic demand. For example, the monetary policy cuts interest rates and reserve requirements, fiscal policies increase the weight of new and old infrastructure, and support real enterprises to reduce debt-side costs, stabilize the property market to support rigid demand and improve demand, boost consumption and issue consumer vouchers, give tax relief to enterprises that absorb youth employment, likes and boosted confidence in the private economy, stabilized foreign trade, etc. It is a good way to fight the economy and save the stock market. It is to prosper the A shares. Boosting the big A can boost market confidence, improve the wealth effect of residents, and promote technological innovation, which is not only beneficial for the present, but also for the long term. Institutional investors can be considered to increase the proportion of bottom hunting allocation, play the role of value investors as a ballast stone, and at the same time cooperate with tax reduction and exemption to activate the market. China's economy has great potential, and it is believed that after a series of pragmatic and effective measures, the recovery channel will be regained. Specifically, the price data for May showed the following characteristics. First, the sluggish CPI and core CPI reflect that the problem of insufficient domestic demand is still serious. In May, the CPI rose by 0.2% year-on-year, a slight increase of 0.1 percentage points from the previous month. Among them, the effect of tail hikes was about 0.5 percentage points, and the impact of new price increases was about minus 0.3 percentage points. The CPI fell by 0.2% month-on-month, an increase of 0.1 percentage points from the previous month's decline, which was weaker than seasonality. The core CPI rose by 0.6% year-on-year, down 0.1 percentage points from the previous month, and 0% month-on-month. Second, food continued to drag down the CPI, explaining the 60% month-on-month drop in CPI. Service prices turned from rising to falling from the previous month, reflecting a drop in travel demand after the holidays. Food prices fell by 0.7% month-on-month, dragging down the CPI by about 0.12 percentage points month-on-month, mainly due to sufficient supply. The price of services turned from a 0.3% increase in the previous month to a decrease of 0.1% month-on-month, and the prices of air tickets and transportation rental fees both decreased by 7.2%. Thirdly, clothing, other articles and services, and medical care increased month-on-month in the 7 major categories of non-food items, which rose by 0.4%, 0.2%, and 0.1% respectively. MOM is better than seasonality. In addition, Due to the increase in performances such as concerts, the prices of movie and performance tickets rose by 0.8%. Fourth, the pig cycle goes down. The price of pigs fell by 2% month on month, dragging down the CPI by 0.02 percentage points. It has been declining month on month for 7 consecutive months, and the decline has narrowed recently. The price of pigs is mainly suppressed by the high production capacity. From October 2022 to the present, the stock of fertile sows has continued to replenish. As of April, the stock of fertile sows has increased by 2.6% year-on-year, which is a positive growth for 7 consecutive months. Fifth, the decline in the price of industrial products has expanded. Under the background of insufficient demand, enterprises have taken the initiative to destock, and both volume and price have fallen, and corporate profits have come under pressure. In April, the PPI fell by 4.6% year-on-year, an increase of 1.0 percentage points from the previous month's decline. Among them, the impact of tail hikes was about minus 2.8 percentage points, and the impact of new price increases was about minus 1.8 percentage points. The PPI fell by 0.9% month on month, and the rate of decline expanded by 0.4 percentage points, falling sharply for 2 consecutive months. Sixth, means of production accounted for more than 90% of the month-on-month decline in PPI, with the upper reaches falling sharply and the middle and lower reaches also falling to a certain extent. The means of production fell by 1.2% month-on-month, which affected the PPI drop by about 0.85 percentage points. Among them, the prices of the mining industry fell by 3.4%, the prices of the raw material industry fell by 1.5%, and the prices of the processing industry fell by 0.9%. The decline in international bulk prices has dragged down industries such as petroleum, chemical and non-ferrous metals. Insufficient domestic demand has dragged down industries such as ferrous metals and non-metallic mineral products. Destocking has dragged down industries such as computers and automobiles. The month-on-month increase was in the supply industry, which turned from a 0.2% decrease in the previous month to an increase of 0.1%. Seventh, the most urgent task is to make every effort to expand domestic demand for the economy. The will of the cycle is in the stage of active destocking, and the destocking is accelerated, and both volume and price are falling. In April, the finished goods inventory of industrial enterprises was 5.9% year-on-year, and in May, the manufacturing new orders and ex-factory price PMI were 48.3% and 41.6% respectively. In the third quarter, PPI may bottom out. In line with the policy of expanding domestic demand, industrial enterprises have entered the stage of passive destocking and the drag on the economy has weakened. 2. CPI and core CPI downturn. The CPI rose slightly year-on-year, and was negative for 4 consecutive months month-on-month, mainly due to seasonal factors that led to a decline in food prices. Service consumption reverted to the mean, and non-food prices fell. The year-on-year increase in core CPI narrowed. In May, the CPI fell by 0.2% month-on-month, and the rate of decline increased by 0.1 percentage points from the previous month. It rose by 0.2% year-on-year, and the increase rate increased by 0.1 percentage points from the previous month. In the year-on-year increase in CPI in May, the carryover effect of last year's price changes was about 0.5 percentage points, and the effect of new price increases was about minus 0.3 percentage points. The core CPI excluding food and energy prices rose by 0.6% year-on-year, down 0.1 percentage points from the previous month. The core CPI was flat month-on-month, down 0.1 percentage points from the previous month. The decline in food prices was the main reason, but the month-on-month decline narrowed and the year-on-year increase increased. Food prices fell by 0.7% month-on-month, and the rate of decline narrowed by 0.3 percentage points from the previous month, which affected the CPI to drop by about 0.12 percentage points. It rose by 1% year-on-year, which was an increase of 0.6 percentage points from the previous month, and affected the CPI to rise by about 0.19 percentage points. The price change structure of food items this month was mainly affected by the prices of fruits and vegetables, pork, aquatic products, egg milk, etc., which affected the CPI to drop by about 0.13 percentage points, accounting for more than 60% of the total CPI drop. First, due to seasonal factors, the supply of vegetables, fruits, aquatic products, egg milk, etc., is sufficient, and food prices generally fall. From a month-on-month perspective, in May, grain, edible oil, fresh vegetables, livestock meat, aquatic products, eggs, milk, and fresh fruits decreased by 0.2%, 0.5%, 3.4%, 1.3%, 0%, 1.3%, 0.1%, and 0.3%, a change of 0.0, minus 0.1, 2.7, 0.6, minus 0.5, minus 1.1, minus 0.3, and 0.4 percentage points from the previous month. Fresh vegetables, livestock meat, eggs, and fresh fruits affected the CPI by 0.07, 0.04, 0.01, and 0.01 respectively percentage points. From a year-on-year perspective, vegetables, eggs, and livestock meat were the items that declined. In May, fresh vegetables, livestock meat, and eggs decreased by 1.7%, 1%, and 1.5% year-on-year, respectively, a change of 11.8, minus 3.2, and minus 2.7 percentage points from the previous month. The second is that the price of pigs has been affected by factors such as the increase in stock supply and the downward cycle of pigs, and the month-on-month decline has narrowed. In May, the price of pigs fell by 2% month-on-month, and the rate of decline narrowed by 1.8 percentage points from the previous month, which affected the CPI to drop by about 0.02 percentage points. The price of pigs dropped from 4% to minus 3.2% year-on-year, a decrease of 7.2 percentage points from the previous month. The non-food chain changed from 0.1% to minus 0.1%, down 0.2 percentage points from the previous month. After the retaliatory service consumption in the first quarter, it returned to the mean in the second quarter. Although there were more trips and tourists on May Day, they were priceless, and per capita consumption expenditure fell. Among the 8 major categories, the prices of clothing, medical care, other supplies, and services maintained a positive month-on-month growth in May, at 0.4%, 0.1% and 0.2% respectively. Included in other supplies and services, the prices of movie and performance tickets rose 0.8%, and the prices of air tickets and transportation rental fees both fell 7.2%. In May, housing, transportation, and communication, education, culture and entertainment decreased by 0.1%, 0.6%, and 0.1% month-on-month, respectively, and decreased by 0.1, 0.2, and 0.6 percentage points from the previous month. From the perspective of sub-items, 1. Insufficient durable consumer goods, household appliances, and vehicles decreased by 0.6% and 0.4% month-on-month in May, respectively increased by 0.0 and 0.5 percentage points from the previous month. 2. Service consumption momentum slowed down. Medical services, other supplies and services rose 0.1% and 0.4% month-on-month. Household services, postal services and educational services remained the same month-on-month. Transportation use and maintenance, communication services, and tourism decreased by 0.1%, 0.1%, and 0.6% month-on-month, respectively, and decreased by 0.1, 0.1, and 5.2 percentage points from the previous month. 3. Affected by the drop in oil prices, both hydropower fuel and transportation fuel in May decreased by 0.2% month-on-month, with a change of minus 0.1 and 1.4 percentage points from the previous month. Gasoline, 92 hashtag, gasoline, 95 hashtag, and diesel, 0 hashtag, decreased by 2.1%, 1.9%, and 3.3% month-on-month, respectively, and decreased by 5.5, 5.7, and 4.9 percentage points from the previous month. 3. PPI decline expanded. The month-on-month decline in PPI expanded in May, mainly due to concerns about the global economic recession and heightened risk aversion, a rise in the US dollar index, and a decline in commodity prices, domestic destocking, low capacity utilization rates of industrial enterprises, pressure on profits, and weakening demand for industrial products. Both the year-on-year and month-on-month declines in PPI expanded. In May, the PPI fell by 0.9% month-on-month, and the rate of decline increased by 0.4 percentage points from the previous month. The PPI decreased by 4.6% year-on-year, and the rate of decline increased by 1.0 percentage points from the previous month. In the year-on-year decrease in PPI in May, the carryover effect was about minus 2.8 percentage points, and the effect of the new price increase was about minus 1.8 percentage points. From the perspective of ex-factory prices of industrial producers, structurally, the means of production and means of living both declined month on month, reflecting the slowdown in production and insufficient demand. The means of production were weaker than the means of living, the upstream was weaker than the downstream, and durable consumer goods were the weakest. In April, the prices of means of production and means of living decreased by 1.2% and 0.2% month on month, respectively, a change of minus 0.6 and 0.1 percentage points from the previous month, affecting PPI by about 0.5 and 0.05 percentage points. In terms of sub-items, among the means of production, the decline rate of the mining industry was higher than that of the raw materials and processing industries, with a month-on-month decrease of 3.4%, 1.5%, and 0.9% respectively, and a decrease of 1.4, 0.7, and 0.5 percentage points from the previous month. Among the means of living, the durable consumer goods dropped the most, reflecting insufficient aggregate demand. The prices of food, clothing, general daily necessities and durable consumer goods were minus 0.3%, minus 0.1%, 0.1%, and minus 0.4% month-on-month, respectively, a change of 0.2, minus 0.1, 0.1, and 0.1% from the previous month. Minus 0.1 percentage points. From the perspective of the industrial chain, the prices of crude oil, non-ferrous metals, and coal industrial chains generally fell in May, while the prices of equipment manufacturing and consumer manufacturing fell, and the effective demand of the terminal was insufficient. 1. Although OPEC Plus increased production cuts to support crude oil prices to a certain extent, the global economic slowdown suppressed crude oil prices, and crude oil prices fell in May. In May, the oil and gas mining industry, petroleum coal and other fuel processing industry, rubber and plastic products, non-metallic mineral products, chemical raw materials and chemical product manufacturing, and chemical fiber manufacturing decreased by 2.1%, 3.3%, 0.3%, and 0.9% month-on-month respectively, 2% and 0.6%, respectively minus 2.6, minus 1.0, 0.2, minus 0.8, minus 0.9 and minus 1.7 percentage points from the previous month. 2. In terms of coal supply, the high inventory of overseas coal has lowered coal prices, and domestic coal imports have increased, and coal supply is sufficient. On the demand side, power plants are less willing to demand coal, and coal prices have fallen due to supply and demand. In May, the coal mining and washing industry, and the petroleum, coal, and other fuel processing industries decreased by 5.2% and 3.3% month-on-month, respectively, a decrease of 1.2 and 1.0 percentage points from the previous month. 3. In terms of ferrous metals, the recovery of steel profits has driven the increase in production, dragged down by real estate, demand will be insufficient, and steel prices have fallen. The profits of 247 steel mills across the country have continued to decline year-on-year since March 2022. In May, the profit decline of steel mills narrowed, down 8.5% year-on-year. In May, the ferrous metal mining and dressing industry, ferrous metal smelting and rolling processing industry decreased by 3.9% and 4.2% month-on-month, respectively, a decrease of 3.8 and 3.2 percentage points from the previous month. 4. The price of non-ferrous metals dropped. In May, the non-ferrous metal ore mining, non-ferrous metal smelting and rolling processing industries decreased by 1% and 1.1% month-on-month, respectively, and decreased by 0.4 and 1.3 percentage points from the previous month. 5. The prices of equipment manufacturing and consumer manufacturing industries are falling, and terminal demand needs to be improved. In the equipment manufacturing industry, computer, communication, and other electronic equipment manufacturing, general equipment manufacturing, and automobile manufacturing decreased by 0.3%, 0.1%, and 0.2% month-on-month, respectively, and changed by 0.4, minus 0.1, and 0.0 percentage points from the previous month. In the consumer manufacturing industry, agricultural and sideline food processing, food manufacturing, wine, beverage and refined tea manufacturing, and textile industry changed by minus 0.7%, minus 0.2%, 0.3%, and minus 0.2% month-on-month, respectively, which were 0.6, 0.6, and 0.6% higher than the previous month. 0.5 and minus 0.1 percentage points. In terms of purchase prices, the prices of industrial intermediates generally fell. In May, fuel power, ferrous metals, non-ferrous metals, chemical raw materials, wood pulp, building materials, and agricultural and sideline products fell by 2%, 2.2%, 1%, 1.3%, 1.4%, 0.7%, and 1%, respectively, compared with changes of 0%, minus 1.8, minus 1.2, minus 0.2, 0.0, minus 1.0 and 0.1 percentage points.